right. Monday, October 20th, 7:42 a.m. Seems like a lot of action today on a lot of stuff that I don't actually even trade, but nonetheless, action. Pretty big earnings week this week for sure. We have the likes of, if you come over here and look at our earnings, it is a pretty action-packed week. I see that we're going to have Coke tomorrow, Lockheed Martin, Halliburton. So a lot of the oil and gas, some of the defensive stocks. You got a consumer discretionary in there. Netflix, some of the big techs, you're going to have Netflix. Likely, I believe Tesla is this week as well. Looks like Las Vegas Sands. So there's a lot. Yeah, there's Tesla. Looks like O'Reilly Automotive, IBM, Honeywell, Dow, Valero, Freeport Mac, Ford, Intel, Procter & Gamble. I'm just going by the big ones. I know there's some smaller ones in here. F5. And that pretty much brings us to the end of the week. So, overall, pretty interesting week ahead with earnings, government shutdown. I know they're going to be doing some data release anyway, even though the government shut down. That sort of thing. I mean, who knows? Who knows? I'm likely not going to trade any of these next couple of days. I mean, Lockheed Martin, I don't know, maybe. I was in a trade on Lockheed. I was in a short on Lockheed Martin. Oh God, I can't even. It had to been. It was pre-COVID. And I must have been in the trade. I'm telling you, I think I was short that stock for, it was close to 10 years, I want to say. And the stock it literally didn't do anything. So I was short long story short is I was short the stock, but I also shorted a put, right? So essentially it was a covered short position, even though I was short. And the way I ended up getting short is I actually had naked calls. I don't know if I had naked calls or I had a call spread or whatever I had. I know I didn't short the stock. So I wound up getting short stock probably because of short puts that I had at some point. And I literally held on to it for like almost, I want to say it was like 8 years, 7 or 8 years, and literally broke even on the trade. I'm never. It sits in my head, and I have never traded this since. But although it actually does look a little interesting here, problem with this stock overall is it's generally not very. I don't know what it gets on a liquidity scale. I can't believe it gets anything good. I mean, it's 2 stars, which I believe that because it is not very liquid. You would think it would be more liquid than it is. Expected move for earnings is about $25. So, I mean, good IV rank. And when you look at it historically, it is relatively, it has run higher, but not really consistently. But it is elevated. I'm not going to say it's like super juicy here at all, but it is a little elevated. I mean, kind of looking for something. And then you go in and look at options on this, and this is where I get discouraged. And if this is a lesson to anybody who's new to trading options, this is one of the things that you need to really be aware of. when trading options is you really have to look at open interest. And the reason is it's all about, like, a lot of these options can become like penny stocks, where if they don't have any volume and there's no interest, don't think you're going to get good pricing. And it's the same way in options. I mean, the option market is a completely different animal than the stock. Look, it may have been great trading this stock on the way up, because there was a lot of catalysts to own that. But then you go and look at the option market, and that wouldn't reflect that. I mean, to me, this is a horrible option market. I mean, and this is really the most recent, 30 days out in here, and you have options that are like all over the map, but within the one standard deviation, that blue line on either side, and you literally have no expiry on either side that has over 1,000 contracts. Horrible. So I can't even look at this. And so let that be a lesson here, that if you are new to options and you are trading, it's really important to look at open interest. And look, I'll give you an example. And even Netflix, I think Netflix is actually a bit crappy as well. But, comparatively, I mean, it's not the same price. But even here, these markets tend to be kind of thin too, because the stock is very high. But even this has a couple of expiries and a couple of option contracts that have over 1,000. This one 3. That's not really a good example. A good example of a really liquid stock would likely be something like Tesla, right? Love it or hate it, and whatever your opinion is. But overall, this is an option market that is extremely liquid. And you can see that all up and down the option chain here. I mean, you literally can, there are 20,000 contracts on 20 and 30,000 contracts on some of these, so you have endless possibilities of doing things on this stock in the option market than you do in Lockheed. So just be aware of that. And the more interest and the more volume, you're going to get better markets. You look here, these markets are only 10 cents wide overall. And likely when the market opens, these are going to tighten up. These are going to tighten up a lot. But looking at Lockheed, you're probably not going to see this one. You look at this one, these are not going to tighten up. I think these are like $1 wide. That's insane. I can't trade something that has dollar wide markets. That's insane. And I doubt they tighten up. So anyway, just let that be a lesson in option trading, like 101. Volume and open interest. And again, it has nothing to do with the stock. It's the volume and open interest in the options. And preferably always look at the options that are generally I usually say 60 days and less because, the further you go out, the less interest you're really going to get. That's just the reality, right? The closer you come to expiry, the higher interest you're going to have. And that's just the nature of the game. And so, I usually say look at 60 days or less. And if you see, and Tasty Trade makes it actually very easy, because they have this liquidity and this high option volume list. And I use this pretty much exclusively. Now, if you don't have Tasty Trade and you want the list, I'll screenshot it. I'll see if there's a way I can actually screenshot it and just put it up. But they're all most of the names that you're probably familiar with and that you see out there. And the nicest thing about this list is all of these stocks generally have good options. Not only are they very liquid from a stock point of view, but they're very liquid from an option point of view. And there's a lot of open interest for the most part. Now, not all of them. Some of them that are on here for obvious reasons, because they're in the news and maybe they're making. But overall, the option markets in many of these stocks that are listed here are very liquid. And I can actually confirm that because I use this all the time to kind of stick to the most liquid underlyings. I mean, and that's kind of, the story there. And then what I usually do is I'll take this rather than look at those earnings lists, and I'll just look at this and rank these by when their earnings come out and see if I'm actually going to trade them or not. And likely any of these that are on this list this week, I'm going to trade these probably. I'm likely going to do something in Netflix tomorrow. I'm likely going to do something in Tesla. QuantumScape, I don't know. I may or may not do something on that. That stock's been, all over the map. That was a stock that was almost I want to say it was almost $200 at one point. And it got absolutely annihilated. Yeah, it was actually pre-COVID. I don't know if I can go back that far. But pre-COVID, I remember that one. I don't know, did they have like a split or something? Because I could swear that thing was up. Yeah, I think they must have had a split or something. This doesn't go back. That's what it is. This isn't going back far enough. Anyway. But for the most part, these are going to be the underlyings that I stick with for doing earnings trades and just trading in general. Like most of the time, I'm going to stick to the stocks that are on this list just because they're the most liquid. So anyway, there is that. There's a few things going on here that I see. I see CLF. I see CLF is actually on the move. I don't know what that's all about. I have some CLF. I've had some CLF for a long time. Big move up. Investors stop. Cleveland Cliffs looks to join Rare Earth Club. Cleveland Cliffs shares are trading higher following mixed. Okay, so they had earnings. All right, so they had earnings. All right, so it's probably pretty expected, to be quite honest, because any of these earth stocks have just done absolutely tremendous. Gold is kind of running away again. It's back up $50. It got a little tanked on Friday. Friday was kind of a crazy day, but it was an option expiry. So, and then overall, and then so today actually I think I saw it up like $50. Now it's up almost 70. Wow. So gold's on a rampage again. And then just looking at the tape here, I don't really see anything that this thing, REPL, I have no idea what that is. Replimune Group. So some group of penny stock pushers are happy today because this thing doubled. Whatever this is. Some FDA approval. Walk. So Nancy Pelosi probably capitalized on that one for sure. Then I also see Natty Gas actually getting a little push to the upside, which is pretty amazing. Natty Gas has been an absolute dog shit piece of crap. But again, a problem with Natty Gas is there's not much you can do. But big gap up on Natty Gas. I don't know what the deal is here. Electricity prices. I mean, I gotta believe. And look, I'm based out of New Jersey, and I don't know. I mean, I gotta believe no matter who gets elected, they're going to be invested. I hope they start investing in some natural gas fired power plants, at least to kind of take the pressure off our utility rates, because I know my gas bill last year went through the roof. It literally doubled, and it was all transmission charges. It had nothing to do with what I used, because I actually used less gas last year than I ever used, but my cost was twice as much as it's ever been. Fucking amazing. Always getting into your pockets, man. Everywhere you go, no matter what. There's always somebody trying to dig into your pocket one way or another. So anyway, there's that. And then as far as like, what I did Friday, and I don't know if it was the right thing to do or not, but Oracle, I saw Oracle get smashed Friday. It was down like $25. So what I did is I sold a 300 put. I went and sold an in the money put. I'm down a little bit. I was down as much as 400. I kind of hung in there. It looks like it's bouncing a little bit today. So the play there wasn't so much a price. I was really just looking to kind of capitalize on the sell-off, because it's probably better to go into Tasty Trade. It's capitalize on the sell-off and selling in the money put. And you see here, I have some shares on a couple accounts. Always full disclosure, but and I think did I do the December? I don't even remember. What did I do? I don't even know what I did. I think I did the November. So I got 30 days. So this is what I had done. I did the 30 Novembers. I did the 300. I sold the 300 puts. And so the premise here was to sell these puts. There was a spike in volatility. And so it was kind of a twofold. I wasn't just like looking for the stock to go back up. I was basically looking for the stock to kind of stabilize and maybe go up a little bit, not much, but what I was really looking for is this volatility to kind of collapse. And I was looking to take advantage of that bump in volatility. And if you look here, there's a lot of people out there that were thinking the same thing on both sides. All along here, you have quite a bit of action going on here. And now they're going to add a bunch of strikes in here today on this option chain. But there was a lot of other people in here thinking the same thing. Now, they may have thought it was going to keep going down. I don't think so. I think a lot of this, again, I don't know. I have no idea of knowing what side people are on this, right? Because there's going to be people on both sides, no matter what. It says 2,000 overall. There's 2,000 contracts out there. There's 2,000 contracts out there, right? But I don't know what anybody's intention was. For every buyer, there's got to be a seller. For every seller, there's got to be a buyer. So, but anyway, that's kind of how I'm seeing it. And, all I'm looking for here is just a little bounce. If I can get this thing to even just go to like 293 or 294 and get a little bit of a squash on volatility, I could probably buy these back for I'm figuring maybe about $1,500 and make a quick little profit. Otherwise, I'm probably just going to bail out on it, take my loss if it doesn't work out, and go on and live a life of religious fulfillment after that. So anyway, that was kind of my story Friday. That was the only thing that I had done. Because overall, the only thing that was really the only stock. The market overall was moving pretty crazily Friday. But that was the only thing that I had seen that was kind of looked worthwhile anyway at the time. Because I think it was down at one point like $25. And something came out where whatever reporting they did, I forgot what exactly it was. But if I change this to this, you could see it literally got hammered. It went down to 285 at one point, it looks like. I got it like right in here somewhere, right around 295 or so. So, but it was some kind of announcement where what this big deal that they had with that AI and all that other shit that they were supposed to do, that they over inflated something or something, and that like spooked Wall Street out. Again, I always look at it like, everybody was probably looking for a reason to sell this because it ran up so fast, and that seemed as good a point as any. But other than that, I don't have anything. I'm going to be playing some earnings likely. So let's take a look at Halliburton. Halliburton reports tomorrow morning. This has been overall not a bad one. If I were to do something, I'd probably do it in November. Decent open interest up and down the board. I don't know if you can really do much of anything in here. There's not really much paying. The only thing I could really find myself doing in here, it's tough. I mean, because I don't even know if I want to sell a put at 59 cents. I got to change my account. I do a lot of trading in my IRA, folks, because I don't want to pay taxes. And so the reason why I changed that is because I can't do naked options in my IRA. I don't. I could actually go and like try and get approval. I just look at it as, it's just something I should probably not do. So if I'm going to do those, I do them in a regular trading account. You can see that the margin in here, overall, doing stuff in here is really not that bad. I mean, selling a 21 put here on Halliburton, you're only going to use $312 of buying power, which makes this a great one to trade because of the price. I don't know if I really want to be on the call side on this, only because even though it might get that, I just think you might get your head ripped off if it does decide to kind of bounce. The expected move is like expected move is $1.21. That's really all I would do in there, in Halliburton, would be to sell that 21 put. I mean, you could probably do a ratio. And for those who don't know, if you go up here and on Tasty Trade in the option chain and you want to do some of these strategies, you can kind of build it yourself. And here's the ratio. And you do put, short, and go. And this will actually build it for you. If I was going to do the ratio, I would probably do the 20. I would probably do the 20-21, but that doesn't even look that looks like a crap too. There's really not, you're just better off just sell the damn put. Coca-Cola, good volatility there, but Coca-Cola is another one that's kind of difficult to do. There's really no, outside of maybe doing a really tight strangle, I don't really know if there's any there. So probably going to pass on that one. And RTX. Ivy rank looks too low. They're in the 30s, not really digging that. And then the rest are tomorrow after the close. So I really wouldn't want to do anything today on those. And those two, the only two there are going to be Netflix and Tesla. Likely won't do Netflix. Netflix has become a very difficult one to trade. And it's because of the price. It's kind of getting to that point where, Google was years ago, and what was the other one? Chipotle. There was a number on Priceline, which I don't even think it's bookings now or whatever it is. But there was a number of them that were all in that $1,000 range, and they just got illiquid. And when it gets to that price, I mean, you're kind of pricing out. You're pricing out like small investors, period. When it gets to that, so that's really it. So if I was going to do anything, it's probably going to be Halliburton. And I'm not completely crazy about that one, but, I always like to be engaged in doing something. So I might actually do that. I kind of, depending on what it does today, hopefully it actually backs off a little bit and make that 21 put a little more interesting. That's it. That's all I got, unfortunately, but that's about all that's kind of mulling around. And then looking at the market overall and looking at the ES, I don't see much there either. We kind of stuck. No real interesting pivot points to me either. Pretty tight overall. Even though the range was 146 on Friday. Just don't really see it. All right, so that's it. And so hopefully it'll be a lot more interesting tomorrow when we do some of those earning trades.